Have you ever wondered how companies transform from private entities into publicly traded powerhouses? The answer lies in three simple letters: IPO. Now, what exactly does IPO mean? Well, it stands for Initial Public Offering. It's the process that allows a private corporation to sell its shares to the public for the very first time. This significant shift from private to public is a landmark moment in a company's journey. But it's not a journey they walk alone. Investment banks play a crucial role in this transformation. They act as underwriters, essentially helping to determine the initial offer price of the shares, buying these shares from the company and then selling them to the public. So, in essence, an IPO is like a company's debutante ball, a grand introduction to the world of public trading. Now that we've unveiled the mystery behind IPOs, let's delve into the intricate process that leads to this transformation. Embarking on an IPO is no simple task. It's a complex, multi-step journey that involves numerous parties. When a company decides to go public, it's like setting sail on an uncharted sea. The first step is to decide to go public. This decision is driven by various factors such as the need for additional capital, providing liquidity to existing shareholders, or gaining a higher public profile. It's a monumental decision that requires careful consideration and a solid plan. Next comes the preparation of financial statements. This is akin to mapping out the course for the journey. The company must have a clear and comprehensive understanding of its financial health, and this understanding must be communicated transparently to potential investors. It's crucial to have accurate, audited financial statements. These financial maps are then included in a document called the prospectus, which serves as the company's introduction to potential investors. The role of underwriters is equivalent to having an experienced captain at the helm. Underwriters are financial institutions that agree to buy all the shares at the IPO price and sell them to the public. They guide the company through the IPO process, provide advice on the IPO price, and help to promote the IPO. Pricing the IPO is a delicate balancing act. The goal is to set a price that is high enough to raise the desired capital but low enough to attract investors. This involves assessing the company's value, considering market conditions, and sometimes even a bit of gut instinct. Finally comes the actual public offering. This is the moment when the company's shares are made available to the public for the first time. It's a pivotal moment, the culmination of all the hard work, planning, and preparation. Each step is critical, bringing the company closer to its goal of going public. But what happens after the IPO? The IPO is just the beginning. Once a company goes public, it's a whole new ballgame. With this new status comes a wave of responsibilities and challenges. The company now has an obligation to its shareholders. It must strive to increase profits, provide dividends, and ensure that the stock price continues to rise. It's a dance of balance that requires careful choreography. Moreover, the company is now under the watchful eyes of regulators. Every move is scrutinized, every decision dissected. The pressure is on to maintain transparency and adhere to strict regulations. It's a high-stakes game where the rules are set by the market and the regulators. But let's not forget the silver lining. Going public can also be a catalyst for unprecedented growth. It increases the company's visibility, opens doors to new opportunities, and attracts potential partnerships. It's a platform to take the company to new heights. Going public is a significant milestone, but it's just one part of a company's ongoing journey. So, are IPOs just about companies making money? Not quite. This journey we've taken together has shown us the intricate dance that is an initial public offering. It's about more than just raising capital. Yes, it's a significant way for companies to gather funds, to grow, expand, and innovate. But remember, it's also a process that's detailed and multi-layered. There are regulatory hurdles to overcome, rigorous audits to pass, and a whole lot of paperwork. And once a company has gone public, it doesn't mean they can rest on their laurels. There are increased obligations to meet, more stringent regulations to comply with, and a broader range of opportunities to seize. So you see, IPOs are more than just a money-making venture. They're a gateway to a new phase of a company's life, a phase filled with challenges and opportunities. IPOs are a complex but fascinating part of the financial world. Stay tuned to Fiscal Frontline to unlock more financial mysteries. Don't forget to subscribe for more insights and analysis.